What are debits and credits anyway? We learned in the previous video that the assets of a company must be equal to the liabilities plus the owner's equity of that company. And we also learned that after each transaction, the equation must stay equal. But in the previous video, we recorded the transactions directly under the item name, as if we were adding them up and down in one column. The correct way to record transactions when we study accounting at the beginning is put them in things that look like this. These are the same numbers and the same asset balances on the left. These are the same liabilities and owner's equity balances on the right. And it is still the case that the assets equal the liabilities, except now the numbers are in their proper position inside something called a T account. Now a T account looks like the letter T, hence the term. And like everything else in the physical universe, a T account has a left side and a right side. Now, here's where the word debit and credit come into play. The word debit simply means left side. The original meaning of the word debit comes from Latin, and all it means is left or left side. And of course, the original meaning of the word credit comes from Latin, and it means right side or right-hand side or whatever you want to call it. That's all it means. All the other times you have used or heard those words spoken, they were being used as a metaphor from the original meaning from basic accounting. Now here's what makes it challenging. Sometimes we put the positive numbers on the debit side, but if it's a different type of account in a different accounting category, then instead we're going to put the positive numbers on the right side, the credit side. And of course, depending on the type of account, we might need to put the negative numbers on the debit side, which is the left side, but again, a different type of account in a different category would have the negative numbers listed on the right side, the credit side. So, we're going to record the same transactions as before, and they're going to be recorded in the same items with the same positive and negative numbers that we put before. The only difference is the numbers will be on the debit side and credit side instead of having a plus or minus in front of them. The most helpful way to think of the relationship between our fundamental accounting equation and the idea of debits and credits is as follows. Assets were presented in this equation on the left side. So you could think of them as normally being on the left side, which means they would normally have a debit side balance. And in the less frequent occasion where you have to put a minus to an asset, you would put that on the credit side of that asset's T account. And of course, for liabilities and equity, the idea is the same but the exact opposite. Since they're listed on the right side of our accounting equation, we could say that they normally have credit side balances. And in the rare occasion where we have to put a minus to one of these, we would put that on the debit side of that liability or that equity account. And this system will work perfectly so that after each transaction, the accounting equation will stay equal, but only if after each transaction, the debits equal the credits. That's the reason why you have to make sure the debits equal the credits, because in the system that you're looking at, in this diagram, it will make it so that the fundamental accounting equation stays equal after each transaction. Now, We'll do the same transactions as before, except every transaction will change two accounts. One will be debit, the other will be credit, and the result will be exactly as it was before. Now, just like before, we're starting with a total of $35,000 in debit and starting with a total of $35,000 in credit, because the assets on the left are $35,000 and the liabilities plus equity are a total of $35,000, just like they were at the beginning of the previous video's transaction set. Now, transaction A paid $3,000 cash for a new car. Now, which two accounts do you think would change? Well, if we paid cash, cash will change, and we probably have less cash if we paid. So cash will be minus, and since cash is an asset, the diagram tells us that we have to put that $3,000 as a minus to cash on the credit side, the right side of the cash account. But you can't make a credit without a debit. Now the transaction says the other account is the car, and car is an asset, and we have more car as a result. So if car is an asset and we have more, the diagram says we put the plus on the debit side. So for transaction A, the answer is cash credit and car debit $3,000, and the fundamental accounting equation stays equal. Now let's try transaction B. The owner invested $5,000 of equipment from his home to his business. Well, we did this exact transaction in the previous video where equipment went up, and the amount that this T account measures as the owner's investment in the company also went up because the owner invested more. We know that equipment is an asset, and if we have plus to an asset, the diagram tells us that we put that on the debit side. And if equipment is debit, and the transaction says the owner's investment is the other account, then the other account must be credit. The owner's investment is credit because the owner has more equity in the company because she or he invested more value in the form of the asset equipment. Transaction C is one that we also did in the previous video. Paid $2,000 to decrease the bank loan. Well, of course, if we paid cash, cash has less. And of course, if we paid down the bank loan has less. Well, cash is an asset, and the diagram says if the asset has less, we put that money amount on the credit side. So therefore, bank loan must be debit in this transaction. And you can see that bank loan is a liability. And we know if we pay to decrease the bank loan, that the liability should be debit, the way that we just put here. Transaction D. Sold $4,000 of equipment for cash. Now, of course, this type of transaction is rare because we're not really in the business of selling equipment. But if we sold equipment and we got cash, it seems to me that equipment would go down because we sold some, and cash would go up because we just got some cash. They are both assets. So if cash goes up, cash should be debit, and if equipment goes down, equipment should be credit. So just to see that again in slow motion, the answer to D is equipment credit because we have less equipment, and cash debit because we have more cash. Transaction E. Owner took home a car that costs $1,000. Well, we had something like this in the previous video, or at least I think we did. First of all, if we took home a car, this T account is representing the business's money amount of car, not the owner. The business is a separate entity, and it is the business's T accounts that we're looking at. So the business has less car, and car is an asset and it's decreasing. And if the owner is taking asset value out of the company, that means they invested less. So car must be credit because the business has less car, and car is an asset and car is minus. So car will be credit. And if car is credit, the other account, owner's investment, must be debit because the owner has less investment in the company because they took out some asset. Transaction F, borrowed $7,000 more from the bank. $7,000 more cash, that is. So cash will go up because we have more cash, but on the other hand, we owe more to the bank. And this T account represents what we owe. So cash is an asset, and because we have more cash, and cash is plus, cash is debit. If cash is debit, then the other account in the transaction, the bank loan, must be credit. Now, does it make sense to credit bank loan? Well, the bank loan is increasing, and a liability that's increasing gets a credit. So bank loan must be credit for transaction F for the $7,000. Therefore, cash must be debit. And finally, transaction G, borrowed $6,000 more from the bank to buy a new car. Well, we know from a moment ago, if the bank loan goes up, that's a liability that's plus. So bank loan will be credit. And if we have more car, and car is an asset, car will be debit. So $6,000 credit the bank loan because we borrowed $6,000 more from the bank, and debit car $6,000 because we just got $6,000 more of a car. This is the idea of debits and credits. It comes from the fundamental accounting equation. And now that we're done, we're supposed to do what's called foot every account. That means take all the positive and negative numbers in each account and put them together, and whatever remains shows up as the ending balance. If the positive numbers for assets are more, that means you had more debit than credit, and you wind up with a debit balance. So if you did the math yourself, you will see cash has a debit balance of $16,000. If you take the equipment account and put all the positive and numbers together, put positive and negative numbers together, you will see that they are left over with positive $21,000. And since equipment is an asset, a positive balance goes on the debit side. Same thing with car. If you put everything together, you'll see that during this exercise, car had $13,000 more debits than it did credits. So it finishes with a $13,000 balance. How much do we owe the bank at the end? Well, we started with $15,000 and twice borrowed more, and that was listed on the credit side. And during this exercise, we only paid back $2,000. So if we tried to find out how much is left on the bank loan, we would see that we still owe $26,000. And because we still owe that money to the bank, it's listed on the credit side. Now, the owner's investment transactions are not really done exactly the way we showed it here. We only showed it for the main idea. But you can put together everything the owner put in and took out during the exercise to get the net result. So the net result of what the owner put into the business was $24,000. And now that we're finished, you could probably do a little bit more elementary school math, and you can see the ending total debits equal $50,000, and therefore the ending total credits must also be $50,000. That means the total assets are $50,000 and the total liabilities and equity are also $50,000, and we did everything right.